Okay, good evening, everybody. This is Dennis Wilborn. We're broadcasting live on Facebook, and we're also recording it simultaneously. I want to thank you for spending a little bit of time with us today to see how the functionality of this streaming live process works out, something I'm very interested in. I'll be covering today the Art and Science of Active Trend Trading update. So let's dig right in. There's no reason to continue to wait for anything. Let's go. Okay. Let's wait for it to pop over to the, there we go. Okay, welcome to the Art and Science of Active Trend Trading update. This is basically a beta test of this process for the active trend traders. I want to do this in a live broadcast. Try to do this on a weekly basis. Get that done early so you can basically link into it for our members, for both our premium active trend trader members and our free members, and anybody who just wants to join us. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any method prior to the risk of their own personal capital. My intent with the active trend trading system, I am the founder and head technician for this, is to clarify, simplify, and multiply. Why is that? Before I started trading for a living, I work full-time, 10 to 12 hours a day, multiple days, like 6 to 7 days per week. And so it was a real pain. I wanted to learn how to trade stocks. And so I started learning how to trade stocks back in 1988 while I was still in active duty with the Navy. And basically just continued to grow in my learning and all that type of stuff. But my heart was always in trading stocks. And so if I ever had an opportunity to coach or teach trading stocks, it would be with the people who are still working for a living, with them in mind, to help and try to simplify it for them. So the Art and Science of Active Trend Trading, it's a weekly update to accompany the newsletter. This will be posted online. It covers, and I'm waiting for the, it's kind of weird to see how this is working out. There's a lag time in between on the slides, and so we're soon waiting for it to, if that's one of those things that doesn't work out real well, that's okay. We'll get that fixed in the future. So let's go ahead and get into this, because it is in fact recording. So I cover basically the market technicals during the update, and potential bonus setups, and also other market-driving events. This past week, we had a couple of market-driving events. One of those was, of course, the election, and the second one was the Fed meeting that was delayed until Thursday rather than Wednesday. Fed held on their rates. They're not going to hike right now. They may hike in December, but for right now, they've held off on their hike. And then I'll do a mechanical tip, because I want us to be proactive at the reactive action points. And what does that mean? And I'll cover that quickly first, then we'll get into a couple of stocks. One, be proactive at the reactive action points. It will help you if you learn how to do this. If you learn to do your technical analysis from this perspective, it'll help save time. It'll help you watch fewer stocks and ETFs, and you'll wait for the reactive moves, which tend to be the most powerful. On a chart that we're looking at here, there are multiple, every stock or every ETF goes into a process or a cycle. It'll cycle up, it'll cycle down, but it tends to run in these situations where there are thrust up, reactions down, thrust up, reactions down, thrust up, sometimes moving sideways, then thrust down, thrust back up, thrust down, reaction up. And what we want to do is help ourselves learn where we should be taking trades. And those typically are some of the best places on the reaction down, and we cover for our premium members exactly where those reaction places are, but that's what we want to be looking for. Here's an example of one of the ETFs that we follow, and this is a weekly chart on this. And as you can see, there are multiple times where we had a thrust up, a reaction down. But what amazes me about this is one of 3 other index or sector ETFs that we follow. And we follow that because you get these big moves like this. And so if you're looking for individual stocks that move, in a big way every year, you may or may not find it. With these, of course, hey, these are nice returns over so wait for the winners, 5 runs in 2 years, average run 76%, which is really, which is quite impressive. Let's move on over to I'm gonna just take a brief time out here. Something I just checking to make sure that we are in fact broadcasting, because it appears as if these are not broadcasting. No, it's okay. Maybe it is broadcasting. I just don't see it. Interesting. Anyway, again, this is our first go at this, and we'll see how well it in fact does work. Because right now I'm getting spooling. It may be the bandwidth on my side, but I'll continue with the presentation because it will pop up a little bit later for people to comment on. And it will be recorded for until we take it down. So these are the type of moves I want to be active on and watching. We basically have 7 with the active trend trading system. We follow what I call the Magnificent 7 ETFs, 3 index ETFs, along with their leverage counterparts, along with their inverse counterparts. So we always are where we can basically be in a trade fairly quickly. So that's what we have. Secondly, what we do with the art and science of active trend trading is we go through all 13 premium IBD watch list, and we come up with this particular list. This is called the Composite List, and what it does is it combines every stock that showed up this past week on the list, and it shows the number of lists that this appeared on. And basically, when we sort through this, the stocks that tend to show up on the most list are the ones that tend to have the most interest. In other words, the institutions are most interested in them. And so if we hone in on those particular stocks, sometimes that can give us an insight into potential trading for the week. One of the things in watching this list, and I kind of look okay, we'll get into that when we go over the market review really quick, but we'll cover back over this. We'll take a look at Beat, Cyber, and probably Now. Those were in the news a lot this past week. So let's move along. What else do we have going here? Okay, one of the things we do track very regularly is called seasonality, because typically stocks, ETFs, and sectors, they move with seasonality across the year. Crude oil, basically we're in a section of the year where crude oil tends to go down. We're seeing that right now. Crude has been falling from the sky dramatically. Secondly, the Russell. The NASDAQ, look for this November rally. This could be, some people call this the Santa Claus rally, where we start setting up for moves higher into the end of the year. So, lastly, before we look at the charts, we have one of our other services called the Market Action Points, which is coming in October. Well, it's actually coming in November. It's going to be launched in November. And what it does is it highlights the low spots of the market. It's done a really great job since 2003, trading just a non-leveraged index ETF for the Russell. As you can see, it's averaged about 26% per year. Think about that if you add into that utilizing trading the leverage ETFs can give you some, the returns could be quite striking for you. So let's run over and take a real quick look at some charts. And I'll wait for that to come up. There we go. Okay, there we go. The chart is up now. What we're seeing here are is the spiders. This is the S&P 500 ETF. And what we saw this past week, we saw a nice, as we were looking at those surges up and the surges down, we're basically watching. Hold on just a second. There we go. Got to get my drawing tool out here. What we were seeing is a series of reactive move, thrust down, react up, thrust down, initial reaction up, pushed a little bit higher, pushed up above actually pushed back above all the moving averages, but then sold off a little bit today. The question going into next week is how far is the sell-off going to go? Is it going to go back here to 270, or is it going to go all the way back and are towards the 260 level? We'll wait to see, because this pullback right here will be very instrumental in determining how quickly we're going to turn around and bounce to the upside from here. So that's one of the ones we're looking at. IWM is another one. This is the Russell. It closed a little bit below the eight period moving average, reversed down from the 30, this is a 34 EMA moving average on the daily chart, and it is basically just doing a nice little pullback. How far will the pullback go? If it goes 50% down, it'll be down to about 151. That's where we'd want to look at jumping on a potential trade to the upside. So we like that. It too, if this pullback goes all the way to the 145 level, then that's telling us that there's more weakness in the market than we would anticipate, or than we think there is. Because what we would expect going into the end of the year is maybe a pullback to 150 and then a bounce and run higher. That's what we would trigger for. A couple of the a couple of those stocks that showed up on the big list is, of course, here beat. And like so oftentimes happens with a lot of the IBD list, they jump to the top of the list when they're basically not in a buy point, especially if you're a pullback trader. But we do have a very nice support here at 66. Pulled back and tested that today. On the TSI, which is one of the indicators, proprietary indicators that I use, it looks like on a daily chart it wants to turn over. It's in conflict, as you can see, with the weekly TSI. It looks like it wants to push higher. So look for a little bit of, I would say, potential weakness, maybe a pullback down into the 65 level for a bounce higher. That's what we'll be looking for. That's what I'd be looking for beat. CYBR. Again, CBR, big gap up with earnings, fails with the breakout, so we may get a pullback all the way back down into this level here, somewhere between 71 and 72, or it could always retreat all the way back to 66. Nice push up, nice buying volume there on the daily chart. So that's what we've got going there. And last but not least, I'll just throw this out. We are also keeping our eye on LABU. LABU, actually, we got into a trade a little bit earlier this week. It broke through the 8-day moving average. We cashed out. Now we're waiting for another setup here. LABU, and what's nice about LABU is it has a inverse, which is LABD, and these are the ones of the big movers. LABD is the inverse of LABU, and if you move back from, it's about from the low a couple of days ago or from the candle a couple of days ago, it's about a 37% move. back up to the highs. So I will also be watching this. Daily wise, we're getting a nice little tick up. So this may be a tradable trade, picking it up this entity about 34, and I would make sure that I was, put a stop loss just down below the 34 moving average, as long as it's not over 5%. In this case, it was, right at 5 to 6%. I don't want to lose any more than that on one trade. So, okay, let's go back to our other slides. Okay, look for an announcement coming out on the market action points. Sometime in November, we want to give you an opportunity to become basically a charter member, and it's going to be provided at a price point that is exceptional, and it has done a great job. And some of the things that the weaknesses in EWA we've corrected with the new advent of the market action points. Here's how we're doing so far with the active trend trading system. We're up about 33% for the year in the 3 strategies that we cover. And one of the other things is, we've averaged since 2012 30% per year on active trend trading, and so we want to always give people an opportunity. Last chance, we're going to have an opportunity to get in for a 40% discount on your membership, and I always invite people to just come and give it a try, see how you like it, enjoy the training. So if you want to become a active trend trading member, you can sign up down here at this website. On the active trend trading website, there is a bonus. There is a password for this special deal. It's called bonus, and the password, and that's all caps. So if you have any questions, you can always reach me at dww@activetrenddtrading.com. You can text with us or basically get with the messenger at facebook.com/active trend trading. So as always, trade wisely, trade profitably, take time, enjoy the journey. And for this particular weekend, always Monday is Veterans Day, so enjoy your Veterans Day and have a absolutely fantastic rest of your weekend. If you find this video has been beneficial to you, please, 1, like it, and also leave a message. Just do some comments for us. That would help us to basically, apparently Facebook measures how well your site is doing by the number of comments and number of likes. So please give us a few likes and make some comments. We love to exchange. We're always liking to discuss trading ideas with our members. So until next time, God bless everybody. Aloha.